Hi, good morning, friends. I'm back with the pre-market report for today for 10th of December. And what a nice day it was yesterday, again for option selling. And as I have said many times before, that for an option seller, there is actually no option apart from coming every day to the market and selling. So anyone who missed out on Friday, anyone who missed out yesterday, would have missed out on a huge amount of decay. So just to give you an example, yesterday the market for Nifty decayed by almost the straddle decayed by 50 points and Bank Nifty decayed by 100 points. So these are massive numbers. I mean, just to give you a context, in Nifty, if you get about 30 points, you actually end up making 1%. So anyone who missed out yesterday would have lost out hugely. And what we had seen, what happened on Thursday was complete mayhem in the markets. So anyone who is doing option selling, if their risk is controlled, they would have survived Thursday and they would have recovered more than that on Friday. And yesterday, again, it was a very good day for option selling. So again, it would have added a lot to the option sellers kitty. So I will just tell you what a little bit about myself. I've been doing trading for last 4 years. I've been a profitable trader. I've been in the market since 2006. That is when I actually started. But I became profitable somewhere around 2018 because I was doing part time. But 2020 is when I actually started full time, and since then I have been a successful, profitable options trader. And my book size is fairly decent. So having said that, even I trade with a system, and I trade with a system which has a fixed quantity every day in terms of how much loss I can take and how much maximum profit that I can take as well. And that what that ensures me is that on bad days I don't lose too much capital, and on good days I end up recovering whatever I lost on bad days and more. So my risk reward ratio is typically skewed more towards the reward, and the risk is much lesser. Now, having said that, what does the market look like after that? So yesterday, as I had said, that the PCR, the put call ratio, was flat for Nifty. Now that has changed a bit. The put call ratio stands at 0.8 right now. So there are about 19 crore calls written in Nifty for about 14 crore puts. So that's a slight difference from yesterday. So maybe that could indicate some sort of a pressure on the markets. Bank Nifty PCR is flat at 1, so there is no problem over there. What happened in the US markets last night was US markets were down. They were down about 0.5% with all the three indices going down: Dow, S&P and Nasdaq. And the selling pressure actually came in because of the tech names over there. Nvidia was down and so on and so forth. S&P VIX has increased by 11%, but the VIX number is very low right now, so there is nothing to worry. But yes, whenever the VIX goes up, for option sellers and for traders in the market, there is that is a warning sign. But the absolute number is very low right now, so there is nothing to worry per se. The US futures are indicating a flat opening over there, so that is not too much of a worry. Again, Asia is trading kind of flat to green with South Korea Kospi up, so that again is not a worry at all. One thing that stood out yesterday in yesterday's market was that the consumer facing stocks actually took a very big beating. So companies like Godrej, Dabur, etc. Godrej in specific, because they came out with the guidance, fell almost 10% at one point in time. It closed at about 8 odd percent down. And this is a trend that we have been seeing in all the consumer companies across the industry, that all of them are down anywhere between 15 to 25% from their 52-week highs. Now, what does this indicate? It of course indicates that there is a stress in consumption, and because a lot of these companies are rural facing, so the stress possibly is in rural and semi-urban areas as well, along with urban areas, because we are seeing even premium companies like Nestle, which have premium offerings, even their share price has gone down. So what this indicates, of course, is the slowdown, and also what it indicates is that these companies are finding it tough to have a volume growth. They are somehow managing 5-7% of value growth with price increases, etc., but the volume growth is just not coming. And what has happened is that these companies were commanding a PE multiple of anywhere between 50 to 70. Now that multiple is shrinking. And it has actually gone down to 40 to 60 now. Now, whether that is a good multiple for these companies, only time will tell, because there was a period, I remember, from 2002, when all these companies are available at 20-25 kind of PEs. And then a significant re-rating happened post 2010, when these companies actually their PEs jumped to 50, 60, and again, towards the latter half, around 2020, and so some of these companies were trading at even 90 PE. So from there, of course, they have come to more reasonable valuations now. Some of them definitely look very attractive to me. I have some of them in my own portfolio as a long-term investment. But of course, this is not an advice to buy any of them, but they definitely look attractive at this point in time. How much return one will get from them is, of course, something that has to be seen going ahead. Uh, So this is what it is in terms of the market roundup. Let's see how today pans out. I'm hoping that the option decay that has started happening for the last 1 week or so continues, and we don't have any wild swings coming in. And again, I'm hoping that December, which traditionally has been good for equity markets for option selling, continues to be good going ahead even into this year. So that is the wrap from my side on how the markets were, and how the markets are looking forward for today. And hopefully I will see you tomorrow with another video. I'll try to make a post market video as well. But depending if there is some big news or big movement in the market, I will update you. Thank you so much.